What is up? What's up, guys? I'm back. It's been a few days, like over a week, something like that. Let's figure out this music leveling. I swear it changes every time I stream, like the volumes slider does all sorts of different things, and I have to change it every time. Anyway, hopefully that mix isn't too bad. Let me know if the music is too loud and I'll fix it. What's up, Honest? What's up, DC Woodworking? I'm gonna start off by looking at like a high. What's up, OG Alchemist? A high time frame chart, maybe a weekly chart for Bitcoin, and we'll get a bearing on where we're at. So I've been tracking this rectangle on Bitcoin. There's this sort of consolidation area that we're in, and we've left it. We've sort of erupted out through the top, so that's a good start. This is the weekly time frame though, so there's still 3 days left of the current candle. So for all we know, we're going to get another big tall wick. Like, if we lose these levels and come back down into the box, into the rectangle, it's just going to be wicks. So we want this to, like, for the bullish scenario, we want this to close outside the rectangle. We want progress in one direction or other, right? So from a bullish perspective, this is a good sign. This is a good start, right? Obviously. So from a bearish, like, you know, a lot of people were calling for 30,000, 35, 30,000, which could very well still be on the cards as well. Because if I take you back to the daily chart, there is still a threat of some kind of head and shoulders, something like this. That could still very much be an outcome that we're looking at. So there's still there's still some work to do. We've just had the daily close, so this daily candle was really nice. So we'll see where this day takes us, whether we get another solid green candle or whether we get a corrective move back down to back test, you know, the top of this rectangle. We will see. So far so good. What is it? It's up a little bit. It's been 2 minutes. Yeah, so this is the progress we have to make. So between here and here, which is basically this section of the chart, we need to make that progress to call this, you know, to eliminate that head and shoulders theory or situation. From a timing perspective, I think, you know, obviously after the ETF hype and the ETF approval, there was a big sell-off. There was a lot of bearish divergence by this point. So I bet you, like with this peak here and then this peak here, price obviously heading upward, but I can almost, like, without even looking at it, I think the oscillator, there's a chance that it could have done this, like on the RSI, something like that, which would be a lower high on the oscillation, which means divergent. So how do we pay for divergence? It's either by going sideways or by going down. And we did. We went down. We got arguably like an ABC correction off the back of that. So let's have a look. Let's find an RSI, relative strength index, and see what it said. Oh, look at that. Would you look at that? So there was the high, there was a high here. Here's the highest high, and here's a lower high. So that is classic bearish divergence. So the question becomes, have we paid our dues? Have we paid the fine, so to speak, from this correction here? Like, was this enough to reset and get us back on track? I think, yeah, why not? I want to look at the higher time frame as well. Let's run it through the weekly. Okay, there's no divergences on the weekly so far. The last one we had was back here. There was a bearish one here. You can kind of see it. Something like this, where the oscillator wasn't maintaining that price strength. It wasn't reflecting the same thing. And what did we get? We got a correction off the back of it. So pretty common thing when you get bearish divergence on a high time frame, that it's going to correct. We had beautiful, by the way, beautiful bullish divergence on these lows here. Check it out. So we were copying lower lows on price, but higher lows on the oscillator, which is a very big sign that the down move was exhausted. See that divergence there? That is bullish divergence. Let me just make this a bit clearer, and we'll go green for bullish. So that is like the warning sign that there could be a turning point coming up, and that's exactly what happened. We got that turning point. We were able to go up. So are we on the weekly chart, being on the lookout for divergences? The most recent being here. This was a bearish one. I'll highlight that. And we'll see if it reflects on the oscillator. Yes, it does. So bullish tends to go... Alright, let me get my pen tool. Bullish divergence tends to look like this. Bearish divergence tends to look like this. So this being price, this being oscillator, this being price, this being oscillator. So confluence or convergence, like when things are acting as indicated by the RSI, that's when you've got a rise in price and a rise in oscillator, or a decline in price and a decline in the oscillator. That's how things are naturally moving. That's how things are on track as far as divergences are concerned. So are we getting any kind of indication of bearish divergence on the weekly? I don't think so. There was a little bit, but I think we've paid for it. I think we're off the hook. So if you take these highs, if you're going to refer to the wicks, there was definitely that correlated to down here. Yeah, that was definitely bearishly diverted. So nice correction off the back. So now, well, let me check let's check a higher time frame. Let's go right off the board. Let's go the monthly and see if there's any kind of hints. And not really. We haven't even come up into the overbought yet. That's still to come. The cool thing about the RSI here, that the way it's set up here, is that it goes green when you get overbought. Green in the overbought. And then, I mean, there's never been an oversold on Bitcoin on the monthly perspective. You'd have to go down to the weekly to see that. Wait, let's go down to the daily. Yeah, there we go. Okay, there's some oversold. That's the FTX drop, isn't it? Oh, no, this is August. FTX drop. So this was quite a deep push down right here. Back in August of last year, that was a deep sell. That was kind of scary at the time. All through here, on the daily, we were very cooked. We were oversold all through here. And there was divergences. Look at this divergence. Oh, wrong button. This divergence here. So lower low price, lower low, lower high oscillator. So lower high oscillator, higher high on price. Where's the corresponding? Oh, it's all the way up here. Look, that's ugly. Ugly bearish divergence. But there was still a lot of time. And look at the way we paid for that divergence. We just went sideways. We didn't really, it didn't cause this devastating, return to the bear market or anything like that, right? We sort of just bought time. We let that oscillator cool off. See, and it did cool off. It's cooled off a lot since then, and now we are on the way back up. So I think things are looking kind of healthy. I don't think things are too cooked or too high up. I think things are just tracking as a normal trend tracks. And a way to sort of see that is to go back to previous trends, previous cycles. The last bull market we had, heading up to 65,000. So just this section of the bull market, because we know it was a double top bull market, because there was also that. But anyway, just going back to the way we came up out of it. Let me just turn this on the logarithmic, so we can frame it up a bit better. So everything kind of stayed pretty confluent with the price as far as the oscillator is concerned. There was, a series of highs, dips on the RSI back to neutral, which only reflected a slight pullback on price. Nothing, there was no big devastating drop. It was just a slight pullback. That's when it was. That's when it tested the all-time high, the previous all-time high for the first time, and found resistance, peeled off, and then reattempted. So that's kind of, if we come back to $69,000, that'll be what may happen. Look how far after this. By the way, this is the halving. This yellow line here. That was the last Bitcoin halving. So it took some time to come up and revisit the previous all-time high. Just like this time around, if we get something similar, we are, by the way, we are looking a lot more bullish and healthy leading up to this halving than we were leading up to this one. So even before the COVID drop, look, we were already downtrending severely. Whereas this time, that should have happened over here. I'm thinking maybe if we hit this $49,000 target here, a lot sooner, that's where it would have looked more similar to this cycle. But I think this cycle is not like the previous. I think it's more like the one before, which is the 2016 bull run, 2016, 2017 bull run. So this one, I think we're looking more like this than this. We're not looking as much like that. Let me go to the weekly for a second. Turn off the indicator. Go logarithmic again. So you might be able to see what I mean. I think we look more like this one than this one. This one was very chaotic. So we came up, I think this run-up was too much too soon. Way before the halving. The halving's all the way over here. And you're running up all the way, so early, 12 months early, or something like that. Yeah, almost 12 months early to the halving. So It was a very ambitious push and it got corrected. So this time it's been a more gentle approach. Like it's come up over time, and here we are. Whereas this one tried to do it rapidly, and it had to correct off the back of it. We had the COVID crash, recovery, and then, you know, back on track and then up. This is more similar to what we're getting now back here, like a gentle rise that is a lot more sustainable than a parabolic move. Like if you go up, you're likely to come down with equal energy. Kind of like this bull market. We went up very steep and then corrected heavy off the back of that. A lot of these blow off top highs are followed by pretty sharp descents. Now the difference being, look at, these are all blow off top all-time highs at the time, right? They're all just one peak, single peak. So this time around we had, or the most recent bull market we had was a double peak. We had a double top. You know, arguably the next high was higher, and that's correct. It's 69,000 as compared to 65. So, but we haven't done one like this before. We're used to getting a blow-off top. So if this was a blow-off top all-time high, maybe it would have done something more like this. Like if it had the full energy like the previous ones. So maybe we would have got a much higher all-time high if it didn't get resisted and distributed here, you know? Maybe that's a bit ambitious, that spike. Maybe it's more something like this, taking us to 100k, because 100k was a big target that everyone was looking at the time. But yeah, we got that Wyckoff resistance through here, had to dip back down and then push back up again, make the lower high. By the way, that was bearishly diverted, so you had higher high on price, lower high on oscillator. In a big way, like big time bearish divergence. What are we? We're on the weekly chart. Let me just bring that RSI back on. You'll see exactly what I mean. Look at that. It's so evident. You had that real huge peak. Even before the peak was in, we were already diverting. We were already getting huge divergence off that peak. But to pick a point, like here's the RSI peak of the all-time high. Look how low it is compared to like how energetic the market was back here. So that's a telltale sign that the market has exhausted itself. You know, it's running out of juice. You're getting that final push. The books are clear. Like the books are lighter on this second push, which is why we got higher off less money. So it took less money, less strength to get the price up to here as it did to get the price up to here. It took a lot of money, a lot of strength to push it up through all of what would have been orders sitting in the book, resisting. So that's why you get this huge mountain on the RSI. So right now, I don't think there's any real threat of divergence yet. We're not looking at that yet. That's not really a factor. Just trying to compare like what the RSI was doing. Yeah, so it's kind of like we've sort of done this. I'm just circling the part. We're a little bit more bullish, perhaps. Maybe it's a bit of that and a bit of that, which is corresponding to this on the chart and that on the chart. So a couple of high points. But by no means did these high points spell the end of what was the beginning of the bull run, you know? This was just getting started. This was just getting warmed up, you know, to get into the bull run. And look at it, the way it gets reflected by the RSI there. You just get spike after spike after spike as it needs to, you know. That was a really healthy trend there. There was no divergence about it the whole way up. So it would have been very hard to be calling that the top at the time, because you didn't really have any major signal on the weekly time frame that was going to be a top. If divergence is on your radar, this would have come as a shock, like, because there was no hints. There was nothing telling you that this was over yet. Because everything just stayed confluent. Nothing diverted. You can see on the RSI everything's quite natural and healthy and stable. So that was the difference there. See, this bull market though, huge hint that it was cooked. Huge hint. Huge divergence. You know, higher high on price, or however you want to draw it. It was done. Just like we got the warnings that the bull market was, or the big pivot into a bull run was likely back here because of our lower low on price and higher low on oscillator. That's beautiful divergence there. Okay, I keep going in circles, sorry about that. What are we, 20 minutes into the new daily candle. Just gonna adjust the music once more. It's probably a touch loud. Alright, we're gonna zoom in. Let's go to this chart. This chart's got all of my recent analysis on it. So there was something I was tracking, and that was this pennant, which we have done like a textbook bullish breakout from that pennant. So the context of how you enter the pennant is important. If you're coming into it from an uptrend, the idea is that it continues you up because it's a continuation pattern. It's like a bull flag or a bull pennant, a bullish triangle. The less likely outcome, which can still happen, but less likely, is a drop after a bullish consolidation like this. So we got the textbook outcome, which is cool to see for Bitcoin, because a lot of the time it does fake out. It does fake you out. Like you have, here's an example, right? You had a bull pennant right here. You came up into it quite aggressive. You squeezed, but then you lost. You lost the trend. It went down instead of breaking up higher. So there's an example of getting tricked. Bitcoin's full of tricks. This, you could argue this was like some kind of attempted... Oh, I guess that was more of a rising wedge. So yeah, that was like a textbook breakdown as it fell out of the rising structure. What else have we got? So looking at this yellow trend line here, that was something we lost just here. We lost that trend. We broke the support of it and corrected down. Tried to regain access but got declined again, so we got denied. This is the third try. So, or the second attempt to get back up on top of it. So that was the first one. This will be the second attempt. If we can just get one more breakout and then maybe a correction to back test it as the old support was, because it was support here, here, arguably there, definitely here, here, and here. And like, yeah, so that's just an interesting trend line. There's probably a few other trends to track, but let's see if we can find some. Obviously on the smaller time frame, this was a trend, right? Resistance, 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 resistance. An early point of resistance there. Like it didn't even come up to test it there, so you might not even class that. But we had support, 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 and support. So there was a lot of examples of support going up. So these were two very important lines to track. So now it's like, okay, well, if that's the case, what is happening now? Like, what lines are we working with right now that we need to be paying attention to? Other than this yellow one, I'm just trying to see if there's any others that are obvious. So we're on the hourly. Let's go down to like the 15-minute time frame, because, or even the 5. Trying to see if there's any hints. Okay, I would be tracking the support side. The resistance side, the top side is not really too clear. Maybe you can begin to get something like this on the top side to try and find like where we're running into resistance. But we're definitely getting some kind of support trend, or like, yeah, trend from below the lows, and we are rising into it. So that's kind of bearish. That's a rising structure. So if this comes up, meets resistance once again, gets rejected, comes down, you're facing something like that, potentially. And remember, this is only on the 5-minute time frame, so this is quite small. It's not terribly big. Don't mind me, guys. I've just been on a rampage with the analysis. I haven't really been reading the chat. But yeah, smash up the like button. Appreciate the support. And yes, the S&P hit 5,000. Yep. The SPY. Very nice. Let me open up a SPY chart real quick. Just have a sneak peek. Yeah. I think the SPX hit 5K. This is the SPY, but the SPX is in this list. Yeah, 5,000. Go to the daily. Yeah, it's right on it. Look at that. It got a little bit above it. I'm going to mark that up. So 5,000. Let's dial it right in. 5K. Make it an obvious color. Yeah, that's a big number, big milestone. We kind of double topped it. We've tested it once before almost. Very close over here. And then we got a bit of movement above it, so it's kind of done a swing failure so far. Wow, in the final 5 minutes, the final 10 minutes, you had this really big push up. Hang on, this is a futures chart, isn't it? Yeah, futures. Anyway, yeah, good progress in the stock market, like lots of bullishness. The old all-time high was over here, so we've made huge progress. All right, what was that other chart that I had it on? I think I had it on Solana. Let me have a quick look at Solana. I've got a position in Solana. Okay, it's trying to do a positive start to the day. That's cool. I'm in Solana. My position lives at that green dashed line, so $105.66 is where I currently have a position. I'm not selling it. I'm looking to buy more, but could have taken more action in like that region and even these regions down here. I did a little bit, but I could have gone heavier. The reason I didn't go heavy is because I was not expecting, but I had my just in case money in case it came down to 70 or even 60, you know. So I didn't want to get too top heavy. I want to keep powder in case we do get a drop, because Bitcoin, as good as it looks, has not yet proven to be truly back on track. To get that, we need to break this high. We need to get that high out of the way to really consider the the extreme bullishness is back on, because right now we're still under the threat of a possible head and shoulders, you know. So we've got a little bit more to prove before I can feel more confident. But I do side with the bullish outcome. I am more bullish than bearish, obviously. Otherwise, I wouldn't be long on Solana. I think overall we get a bull market this year, or a continuation of our bull run. But yeah, it's good to be conscious of the pullbacks, because that's where you can add or open new positions, or you want those discounts. You don't want to buy it on a high point, and we're definitely on somewhat of a high point on Bitcoin right now. It's not to say that it can't go higher. So maybe I'll keep these lines here. From a few streams ago, I had a plan. I had drawn out a plan for what I was going to do with Bitcoin in mind. So I'm going to bring that chart up and we'll see how that's tracking. So the plan, I think I named the folder. There it is. You have to go out to the 4 hour to see it. Yep. Okay. So the plan, if support is held, great. We have some kind of exposure. So if you had a position that existed somewhere in here, good. You've got a position in Bitcoin. Great. If support gets held, and it was a deep test of support, but this support was held. Otherwise we wouldn't be up here. We wouldn't be up here talking about it. We'd be talking about the buy zone if it wasn't held. So if support is lost, no worries. Even better, we get a second chance to accumulate more Bitcoin in preparation for the likely bull market. So that could still happen, by the way. We could still get a lower high. There's our recent high. If we get some kind of lower high off the back of whatever this run is that we're getting, then that can spell, a topping type pattern, a head and shoulders, which could throw us down into the buy zone. That would be awesome. If we can get down here, I'll be a heavy buyer of positions. But we didn't get that. We didn't get that, unfortunately. Not yet, anyway. And there's a chance we won't get that. There is a chance we won't get it. Look how quick the halving is approaching. There's the halving there, the vertical yellow line. So it's rapidly approaching. We're already partway through February. We only have to get through March and then half of April, basically, or 2/3 of April. I would say it's about 2 months away before the halving. Now, obviously, on Bitcoin, if you go back to previous halvings, yes, there's been times where we've corrected after the halving. Here's one here. Look at this correction. Big dip after the halving. This one, the week following the halving, was a correction of 10% on Bitcoin. This one was mostly just flat after the halving. Nothing really happened too dramatic. It went up, and then it went flat after the halving. But that was a long time ago. This is back in 2012. This is like 12 years ago. So I think every halving has been kind of unique on price. Price has behaved differently on each halving, so there's no hard rule as to what to expect out of a halving, I don't think. I think the only correlation that you can draw, the only like repeated behavior, is that pre and post halving, it is during an optimistic move in the market. Like you are recovering off the bear market. That seems to be the matching trend here. You know, around halvings, you're rising out of what was a bear market. Let me hide the plan here. The plan's kind of it's not giving us that buy zone. Anyway, yeah, look, this seems to be, look, we're getting optimistic leading into the halving. And if history's anything to go by, then there should be optimism on the way. That's what's on the cards, right? That's the narrative, the bull narrative. So, have you heard of the phrase "this time's different"? Many people say it. Like this time it's gonna be different though. I think that's a riskier thing to say. Like it's riskier to say that something out of the usual behavior of Bitcoin's gonna happen. So what would be something that's out of the standard behavior that we've been getting for 15 years? And that would be a rejection at the previous all-time high and a decline after the halving. That's never happened. And because it's never happened, it's less likely. You know, if you've got bullish move after a halving, bullish move after a halving, bullish move after a halving, seemingly, you know, this is a repeated cycle. This is 4 years, these 4-year gaps between halvings. There's a cyclical nature to Bitcoin that's baked in. Like that is the way it functions. That's the way it is. Since the very birth of Bitcoin was technically a halving event, but you don't mark it because it's the start. So there was like a cycle prior. But it still had a bear market roughly around the same time as each bear market tends to have, like roughly at the halfway point between halvings, you get some kind of retracement or bearish cycle. So do I think just because we've been getting these repeated behaviors on Bitcoin, do I think it's going to throw us into the same magnitude of growth? I don't think so. I think we're going to flatten out a lot. I'll show you what I mean in a sec. Let me get rid of all these squiggles. So let's see. This is what I mean. And you can see it. It's very clear. Let's measure the distances in performance from previous all-time high to the next one. So that's that one. This one going up to the top of the next one's there. This one going up to there. And this is a logarithmic comparison. Now, what have we got? We've got a reduction in performance. And if you spread this out, let me just get a trend. Let's measure the gauge. Let's use a gauge. So if this has been the trend, something like this. The timing's different for each all-time high, so you know maybe this exists over here or something like that. But if you're using equal we're just going to do a rough estimation. So that's like that's a rough equal footing. You would have to cut off some of it to cause a to kind of depict the trend, like the average, something like this, right? So if that is the case, and we get this lined up correctly, that means, and using a flat bottom like this, that means the next one is going to be smaller again, progress. So maybe even smaller, maybe like something like this off the previous high. So if that's the case, then that takes us like this. That takes our next all-time high. Remember, this is logarithmic, so it's still impressive. It's still an impressive price to pull. If our next all-time high ends up being up here, that's over $100,000. That's like 110,000, 111. Now this is just using my eye. This is nothing. This is just gauging like roughly what would be like a plateauing behavior, which is what we're getting on Bitcoin. It's kind of plateauing out a lot. Now watch how different the story is when you turn it linear. See? That would be all the way up here. That would be Bitcoin getting to 110, which is all the way. There's the previous all-time high. There's 110 or 111. That is still fantastic, if you ask me. If we were able to get, parabolic and maybe even do a similar thing where we double top it and then come down. I don't think that's too crazy. Like, look how that would appear on the chart. Yeah, that sort of marries in with the behavior of us flattening out at the top, like getting a flattening as we get bigger. As Bitcoin gets bigger, this arc gets shallower. So it's something like this. You get rapid movement at the start, and then as the asset gets bigger and bigger, you get this flattening, this plateau of performance. That's my gauge on it. What I think a lot of people think that just because we're flattening out, it means that we get this, which I think is bullshit. I don't think it means we have to do that. I don't think it's supposed to be a big rainbow. I think there's no reason to think that. I think it's more realistic to think that it's just going to flatten. If it goes up and maintains its value over time, there's still growth in it. It just gets more minimal. Just like that Bitcoin. If you think of the supply on Bitcoin, it starts very rapid because we're up to 19 million Bitcoin mined, right? The final 2 million, I think it is. Yep, 2 more million coins or less to mine is going to take over 100 years to mine. So that is definitely an arc that has gone like this, where it's rapid at the start like this, and then it just diminishes off. It falls off severely. So it's like that. That's the growth curve of Bitcoin's supply. So the best part of Bitcoin for making money has already come and gone. Like, it was back here. That was like the best window of opportunity was like somewhere in there like that. The rest is like diminishing. Like, it's not as incredible. Even less so here, and even flatter here. And you can see the bigger it gets, the more like boring the performance is. But it's stable. Like, the longer Bitcoin goes and the bigger it gets, the more stability it gets. It becomes a stable asset. Kind of like gold. Gold is so massive that it's relatively stable when you compare it against the dollar. So given time and given size and growth, you lose that volatility. So this is why altcoins are great, because they still have their rapid especially the new ones. The new ones are in this phase, like where they're still garnering market cap. You know, they're still growing from zero. You want to catch it as close to the 0 point as possible so that you can get that explosion. But the problem with altcoins is a lot of them do this. A lot of them have an arc like that. Or, you know, they fall quite sharp after they've finished doing that pump. And even Bitcoin's kind of done that too over time. It gets its nasty bear markets, but the trend is still there. Like the support side is still rising. It's like a rising tide. But yeah, that's my honest opinion on what I think Bitcoin's going to do into the future. I think it's going to hold ground as it gets bigger. Anyway, guys, that's pretty much it. I just wanted to catch you guys up with what I'm thinking. I'd want to see, according to, let's just go out a little. Let's bring those price levels back in. Go down to the hour chart. Yeah. We're starting to fall out of that rising wedge, textbook. So that would be a correction back down to here, perhaps 45,000 test, maybe deeper. We'll see. Now, where was I? Yeah, okay, 4-hour chart should depict it pretty well. There's the ETF high point, the 49K high. There's still a lot of price to go up. You know, a good $3,500 or more to consider that the trend is back on and we're back alive. So yeah, I'm just reading the comments here. Cryptic Sniper saying that, yeah, a number of Bitcoin has been lost over the years. So the more Bitcoin that gets lost, the more available to play with in the markets, which means if demand comes in, it cannot be resisted by supply. The supply will, you know, there's only so much supply that can resist the demand, and that's why we go up. Because there's no one willing, like, with enough Bitcoin to meet that demand. And when you can't meet demand, price goes up, price increases. Anyway, that pretty much covers it, guys. Thanks again for tuning in and catching up with me. Appreciate the support, and I'll catch you in the next one. Take care.